Hello everybody, and thanks for joining me today. Real President Dumpster Fire was rebuffed again in a court of law in his latest effort to block a New York grand jury subpoena, forcing his accounting firm to provide tax returns going back 8 years. Fraudsters around the world are breathing a sigh of relief, knowing that it is the President of the United States who is establishing precedents that will protect them from prosecution in the future. In fact, I think we should change the title of the office from Real President to Real Precedent Donald Trump. Must be an amazing time to be a fraudster, knowing that it is the President who's out there trampling the rule of law in America. And it's looking like a 50-50 bet the U.S. is going to be sentenced to another 4 years of criminal leadership. This appears to be something of a trend among G7 countries, the subordination of the rule of law to the interests of its leaders and their cronies. Canada's Liberal Party attempted to subordinate the rule of law earlier this year in Canada by attempting to force then Justice Minister Jody Wilson-Raybould to offer Canadian engineering firm SNC Lavalin a deferred prosecution agreement in lieu of a good old-fashioned criminal prosecution. Fortunately, the integrity of Ms. Wilson-Raybould prevented that from happening, and investigators are still trying to figure out the extent to which the PMO's office might have been criminally culpable. British Prime Minister Boris Johnson has jumped on that bandwagon, deciding to shield the results of the UK's investigation into Russian meddling in the original Brexit referendum back in 2016 until after next month's election. What is it with the leaders in the Northern Hemisphere this year? Is the rule of law now that thoroughly compromised that the only crime is getting caught mentality extends to our elected officials? I mean, really. All that aside, the cannabis industry is again exhibiting weakness. The Midas Letter Large Cap Index is up 1/4 point, but apart from that, the Small Cap Index is down 2%, the Venture is off 1.5%, and the Midas Letter CSE Index is off 1.76% at this hour. And in the when good news is bad news category, Aphria, one of the biggest Canadian LPs and one of the first to become publicly traded, announced that it had doubled cannabis production capacity to 255,000 kilograms per year with the licensing of its Diamond facility in Leamington. This adds another 1.3 million square feet to the Canadian licensed production capacity of cannabis. There was a time when this would have been enough to send cannabis stocks soaring. Such is not the case in today's bear market. The stock opened lower and is still down over 3%. Yes, the cannabis industry has been a dismal performer lately. Well, actually, since April, nothing new there. But what is it that is going to turn this ship around? Well, my first guest has some insight on that, or at least he can tell you which ones to short. Hedgeye is an independent investment research company in Stamford, Connecticut, serving buy-side hedge fund clients who appreciate their absence of conflict of interest, an utterly unheard of condition for most research firms. Hedgeye neither buys nor sells any of the companies it covers in its research. Shane Laidlaw, who covers cannabis for Hedgeye, and I had a brief conversation just a short time ago. I'm joined now by Shane Laidlaw, Managing Director, Cannabis, Hedgeye Risk Management. Shane, welcome.
Thank you so much, James. Pleasure.
Shane, give me a quick overview of your business model, please.
Quick overview of the business model. Hedgeye has been around for about 11 years. We're an independent equity research firm, so we're not conflicted in any way when we put out a research report. So we don't manage any money, we don't trade any stocks. We're purely paid by our buy-side clients on a quarterly basis based on our idea generation. Starting last summer, I started looking into the cannabis space after covering the restaurants and consumer staples space for about 5 years. And now we're a little over a year into our cannabis coverage, and it just keeps on getting more exciting every day.
Sure. Give me sort of a demographic outlook on who your typical client is from the buy side.
Typical clients on the institutional side of our business are about 50% hedge funds and then 50% long onlys.
Okay, so the fact that you are covering cannabis now and with a higher degree of interest, is that indicative of the rising interest on the part of institutional money managers in the U.S.?
You know, I think when we first came out the gates back in November of 2018 of their coverage of cannabis, it was very kind of fast. The fury was very heightened back then. Everyone was very optimistic about the cannabis space. So there was a big uptick in revenue for our individual vertical right on the onset. But since then, kind of like the stock market, we've seen a somewhat drop off in, I guess, focus on the space as institutional investors that got in early are maybe just trying to more manage their current portfolios as they look today, while alternatively new money is still sitting on the sidelines that we anticipated would come in at some point, but that's still sitting there waiting for further federal regulations, whether it be the Safe Banking Act or the States Act, and just more of a settling down of the public equities market. So I think we still have a lot of optimism about our efforts in the cannabis space, but we need more money to come in order for it to really see an inflection higher.
Sure. What percentage of your clients would you say are U.S. based?
U.S., I would say, represents roughly 70% of overall Hedgeye, but from a cannabis perspective, it drops down probably to around 50% as you look to more Canadian funds as clients in the cannabis space. Not surprising.
Okay, right. Interesting. Okay, so from where you sit, what do you see happening to reverse the dramatic correction that we're in the midst of in the cannabis space?
You know, I don't think we're near the reversal quite yet. Everyone thinks that sentiment seems like it's at all-time lows, but we haven't really hit the bankruptcy cycle that I think is going to come down the pike over the course of the next 6 to 12 months as companies are faced with the realization that they're running out of cash and there is not as much revenue coming in the industry from a legal market perspective as was originally anticipated. So I think as I look at kind of the bifurcation between the US and Canada, I'm much more optimistic on what the U.S. can do over the next 6 to 12 months versus what the Canadian market will do over the next 6 to 12 months, specifically on the long side. If I think about kind of our firm is famous for being about 50% long, 50% short. If I'm looking for short ideas in the space, I'm going to be looking towards Canadian companies because one, they are a little overzealous about expectations, both internally and from a sell side perspective, and they're running out of cash up there, and I don't think there's going to be an appetite to put new capital to work within the Canadian cannabis companies. So as we look to the U.S., from a long side perspective, I look to federal regulations, in particular the Safe Banking Act, getting through in the first couple weeks of December through the Senate. I think there's strong bipartisan support in the Senate, specifically just obviously you have to think about the Republican side of the aisle here, and I think Crapo and McConnell are going to sneak this one through, just as McConnell did for the Farm Bill at the end of 2018. So that'll be a pivotal moment for the cannabis industry as we look for some momentum into 2020. And then as we get past this quarter of operating performance, this will be the first quarter that we have to kind of deal with the whole vape crisis and how that has affected sales over the course of 3Q. There could be some kind of shaky results in 3Q, although everything I'm hearing is that sales of vape more just shifted to edibles and oils and a little bit of flour, so it shouldn't be too big of a deal, but I think there still could be some negativity from the vape crisis that could leak into this quarter, so we get past that and look into 2020 for better operating results in the U.S.
Mm-hmm. To what extent do you believe that the sort of political forces you describe are likely to drive through federal deprohibition prior to or during the upcoming election?
Well, I think the big thing you have to look into as far as the election goes is the Safe Banking Act. It needs to pass before March 2020 or else it's not going anywhere. And nothing is going to get passed throughout the course of the election season, in my opinion. So you really have to just look at the Safe Banking Act getting in before the end of the year in order for anything from a federal regulation perspective to happen for cannabis. Now, as you look at kind of the two opposing parties, Democrats versus Republicans, obviously every Democrat is running with some form of cannabis legalization. I think the front runners, you have to put Elizabeth Warren up there as a front runner on the Democratic side of things these days, and she has a pretty comprehensive look at legalizing cannabis, but you can never rule out what Trump might do to take some wind out of the sails of the Democrats and thinking about kind of something around the lines of the States Act, which is what I think a Republican member would do. I don't think they're going for full federal legalization. You can't rule out Trump pulling what I will call a Trump card and taking the winds out of the sails of the Democrats.
how likely or how unlikely isn't it that Trump might not, if he perceives himself in any kind of trouble in the election numbers, just declare cannabis federally deprohibited by executive order?
I don't think he's going there. I think if he's looking to get elected for another 4 years, that'll completely disconnect him from his base. So I don't think we're going to go full federal decriminalization under a Trump presidency.
Wow. Shane, I got to say that this has been very enlightening, and I'm looking forward to having you back. So Hedgeye doesn't buy or sell any of the equities in which it deals, and that's amazing.
Hedgeye.
Hedgeye, you ever heard of him?
A minute ago I was hearing you talk about it.
Boy, you're one astute fellow, aren't you?
Well, I pay attention.
That's good. Well, you got to pay something.
Pay it forward.
Pay it back.
Pay it back.
Payback time.
Lament.
Payback's a bitch.
Ed's lament.
How was your weekend, Edward?
You know, it was good. I had a lot of walking.
Really?
Yeah.
You couldn't get a ride? No taxis left at that hour?
Yeah, I took a Keys Please home one night.
A what?
Keys Please?
Keys, please.
You know what that is?
Well, it sounds like, I think I do now.
Yeah.
Right. So you call somebody to give you a ride home along with your keys.
Yeah, they jump in your car.
Yeah.
They drive you to your home, put it in your garage.
We have that in Toronto, actually.
Yeah.
I've used it a couple of times for friends.
Yeah, I'm surprised you don't use it every night.
Yeah, no, I wish there were days when I should have, but back then I used to just drink and drive. No, I'm kidding. I don't drink and drive. That's just silly. Have you ever gotten high and driven? Wait. Yes, there's a camera rolling. Never mind. Cancel that question.
No.
So tell me about the your take on the interest rate thing here today.
Well, look at. So we've seen rates move up a bit.
Yeah.
And we saw that resulted in, that the Fed getting involved in the overnight repo man.
Repo man. The Fed turned into repo man.
You know what? They just dropped rates, and as they dropped the rate, you'd think, well, maybe that's going to keep things quiet. But the 10-year rate, we got
the man
a big
almost
rat
fell
back
over there.
Yeah. It's pushing 180 again. I think the highest it's been in the last 6 months is about 190, maybe 4 or 5 months. And it looks like there's pressure higher, and if it goes higher, it's just a matter of time before the 50 trillion in debt out there starts to get nervous.
50 trillion.
I think the total debt in the world's around 50 trillion.
$50 trillion.
It's some crazy number. I don't know what it could be, but we know it's in excess. We know that 15 trillion, for instance, garners negative interest rates. Like that's what they talk about. And I think that's about 30% of all the total debt.
No kidding.
30% of 50 trillion is 50
How much of that do you owe?
You know what? That's the good news. They don't even look for me.
Really? And what does that do for the price of gold?
Well, I don't think it does too much, except if inflation starts to kick in, which is where I'm going with this, like we saw, the price of oil. By the way, the Saudi Aramco issue is now out.
Yeah, I saw that.
Yeah, and oil, interestingly enough, as they're marketing this thing, amazing how oil decided to go up. Maybe oil's back to $57. The markets are at all-time highs. The Dow's at an all-time high. S&P's at an all-time high, and the Nasdaq's at an all-time high. Not a lot, but certainly, the old high on the S&P was 3,029. It's now 3,085 today. That's 65 points, 55 points. I think right now that they want to keep the equities, moving higher.
Yeah, it's funny. The S&P sets an all-time record despite recession looming, despite negative interest rates. So all the indicators suggest that the economy globally should be approaching recession. I mean, they suggest that it already is in recession in many respects by some interpretations, yet the S&P sets new records. So this is my question for you today, and I'll try to keep it an absolute.
Try to get the question out before the show ends. Just kidding.
I'll try to keep the
I don't
colors
want
between the
18
lines.
parts to it. 18 parts.
You want a single part question?
Okay.
I don't know how to ask
I'm
that
just
kind of
kidding.
question.
Shoot.
Okay. If the S&P keeps rising despite growing economic weakness, is it just because Donald Trump is president?
No, I think I think rates are very, very low. Okay, if you look at, I mean, we live in a world that's, I mean, the debt levels are so big. Everything's funded. All the real estate's funded. I mean, I see the stock market breaking out. I think interest rates have bottomed, and I think you got to watch commodities. That's watch commodities for some suggestion that inflation is starting to loom.
Right.
And that's what they've been trying. They can't get any inflation, right? That's the big concern.
Oh, interesting. I have two sets of numbers in front of me, and I don't know which is accurate. Anyways.
What are you trying to look for?
I'm trying to look for high traders here, except this is really interesting. I'm going to go with this one, the TSX volume actives. Bombardier is the leader on the TSX. It's up 6.63%. What? No, sorry,
It was up last week. Remember when they came out with their?
Yes.
No, it wasn't Bombardier. It was SNC
Labs.
sold this highway, which is these highways must just throw money.
Do you ever take the
yeah.
the emergency? What is it called?
The ETR,
The ETR.
electronic toll route.
Yeah. Do you know when they collect on that? Is when you go to renew your license plates. That's when I find out. I say, okay, yes, this normal price increase, and then it's like, and $180 for every time you actually took the 407. The noive of these people.
180.
Well, yeah,
no,
depends how many times you get on it. If you don't order a transponder and get the discount of for the Ontario resident, then you pay the same price as everybody else pays who uses it on a one-off basis. You get a discount if you order the transponder.
Come on.
Seriously?
Holy
you didn't
shit.
know this? How often do you take this thing?
You should have a corporate transponder.
Well, I think we should have a global transponder. I mean,
For instance, if it's prudent to take it to beat traffic, I take it. You know, that's always the overriding concern.
I just do what Google Maps tells me to do.
Yeah.
And do you use Google Maps? Do you let that Google Maps tell you where to go?
Yep.
And do you find that it's generally accurate? Better? I guess you never really know because you don't get to actually go the other way and find out in time.
Once in a while, I don't listen to them, and I wish I did, because they know where that's where it's all headed. Like they know where all the
You know how sometimes the Gardner's so backed up when you're coming into the city from Niagara, and like half the traffic is streaming off and going onto Lakeshore just as you get into the city, and the other half is on the Gardner. I'm thinking, okay, is this Siri telling half of us to take Lakeshore and the other half of us to take the Gardner just to keep traffic under control?
Probably.
Really?
But they have a sign up now, and it says if you take the Gardner, it's going to be this much time to downtown, and if you take
I've
Lakeshore,
noticed those are always wrong.
Oh.
Well, generally.
Yeah, I wish I didn't have to drive at all. I really, really would rather take public transportation.
Would you give up your country living in the luxurious sort of enclave of London where you live there to not drive, to live in a smaller hovel in the city among bandits and thieves and ne'er-do-wells who reach into your pocket and steal your wallet? Just not to drive? Would you rather do that?
I think so.
Really?
Yeah, I think I think a lot of things that like ownership of a house, for instance, I think probably overrated, especially as
now you tell me.
As you get older. Yeah.
Oh, really?
Well, what?
Just more work.
Well, it's like there's a lot of a lot of effort. It just keeps going and going and going. But I think when you're young, sure, family, yeah. When you get older, it's time to, become a nomad again. Become a nomad.
A nomad.
Live out of a suitcase.
See, for me, it's the opposite. It's like When you're young,
Yeah.
it's time to travel the world as a nomad, avoid possessions,
Right.
be free.
Be free.
And then now that I've had my fill of that, and we're here to make a little money. Now it's time to let's get a producing property and let's really get busy. Let's really come out of retirement.
Well, I can't disagree. I can't disagree.
Anyways, the world has become such a place that I don't understand that I think of farming as the only occupation that I can actually undertake that doesn't require my interaction with the outside world beyond selling some vegetables and buying some chickens. And so I can't wait to be a farmer. I'm really looking forward to that.
No, I think there's some, farmers are generally happy people. I find that...
Just saying farmer makes me happier.
Farmer.
Yeah.
We were just talking, and I had this point that I was going to make, but I've already forgotten it.
Oh, okay. Well, while you're doing that, I've got the price of gold up in front of me.
Yeah.
And gold is trading... I've got this blue line here, and I don't know what it means. Let's throw that in the garbage. There we go. Look at that. So this is the year-to-date price chart of the gold price, and it's today at 1505. But look at this range here. Like it has been trapped in this range since the end of August.
Yeah. I'm looking at it as well here, and I've got it on what's your time frame on your chart?
1 year.
Yeah. Well, it's been stuck now for what? Couple months.
Couple of months.
What's going to unstuck it?
Well, it strikes me that the influences that also cause the S&P 500 to set all-time highs when the news is uniformly bad in terms of the outlook for global economic growth, those same influences cause the price of gold to under reflect the value of gold relative to the value of the global economy. Does that make sense?
You're asking the wrong guy. It just seems to me that, the longer we keep going down this crazy path, I think at some point, something that nobody can see right now is going to cause what happened in 2008 and 9 to...
Somewhere down this crazy river. I was hoping you were going to come back, that song, the other vocal.
Yeah, I would have, except I don't know the song.
The words are easy. The second line is, somewhere down that crazy river. Anyways, clearly we're not in the singing business, and TikTok is a far distance away.
Now, that chart right there, is that the chart of the bond market? What is that? Is that gold, or is that the chart, bottom right? Gold. Oh, okay.
Yeah. Okay.
Can't tell the difference between gold and interest rates. Okay, so
we had a company, a private company here just a short while ago. Simon Grig. I don't know why I can't say his name. Simon Grigness was here, and he's talking about a way to monetize the picks and shovel aspect of the cannabis industry.
Really? Well, let's hear it.
Burnt Group CEO Simon Grigness joins me now. Simon, welcome.
Thank you very much for having me.
Simon, tell me about Burnt Group. What is your business model? Where do you operate?
So the Burnt Group is a Canadian cannabis design house. We really focus on creating and designing impactful brands in the Canadian landscape, as well as cannabis-related hardware.
Okay, so specifically, you recently announced a deal with Valens Grow, who's Valens Grow Works, one of our favorites. And tell me about that deal. Use it as an example to sort of demonstrate your revenue model.
Yeah, for sure. So we've had a great relationship with Valens to date, and we saw the potential and the opportunity with the capabilities that their team has and talents around extraction, formulation development, and everything from their processes in their facility. And really, the deal was, a step forward for an unlicensed entity like the Burnt Group to leverage our expertise in brand and hardware, and be able to really focus on the CPG side of the industry and create relationships with consumers and leverage Valens on the back end for the execution of the actual extract in the pens themselves.
So, do you have other clients other than Valens Grow at this point, or is Valens Grow sort of your flagship client right now?
No, so we do have an existing brand in market called Burnt Designs. So it's cannabis accessories around flower consumption. So obviously the first form factor legalized, so everything from storage, preparation accessories to consumption. So that was in market on October 17th of last year. There's approximately 170 stores now to date, and available in the US and the EU markets as well.
Right. So not to sound like I'm trying to make this any more cruder than it needs to be, but in Canada we have a simple way of sort of relating everything to the mining industry. So this is best described then as a picks and shovels component of the cannabis industry.
Exactly.
Right. Okay. So now the thing I like about this is that being an unlicensed entity, you can cross borders. You can offer your designs to any LP, any extractor anywhere in the world.
Yeah, there's something to be said about being an licensed producer, for lack of a better word. It's nice being able to play in the space where we have that freedom around the art, design, and creativity behind creating the hardware and the brands, and being able to move into new marketplaces without the barriers and restrictions that traditional LPs would see in Canada. Right.
So is your expertise then in industrial design and microengineering and all that stuff, or like where's the brain trust in this company?
Yeah, exactly. So I'd say there's probably three main areas. So it really revolves around art, design, and engineering. Really, those are kind of the matrices, I guess, that our team excels within. So everything
like
from
my own relationship.
Exactly. So we have our industrial designers, our engineers, supply chain management, everything kind of to oversee audited manufacturing, and then of course leveraging Valens for their capabilities in science. So between art, design, science, and engineering, we kind of see our suite of products come to life.
So do you have products right now in any of the cannabis stores in Ontario, for example?
Yeah, we do. So we are listed with the OCS and as well as the BC government stores, as well as, like I said, approximately 150 to 170 private retailers aside from the government channels. But this will be our first product in market that is actually cannabis containing.
Right. And so getting back to the Valens Grow deal, specifically you're creating extract pens.
Yeah, exactly. So extract pens, obviously, with what's been going on in the U.S. with vape news, it's of utmost importance being, as regulated and as cautious as possible. So everything on going above and beyond Health Canada standards on hardware manufacturing, so holding ISO certifications, restriction to hazardous materials, and everything under the sun, and of course, Valens being accountable to Health Canada as well for lot testing and their QA/QC procedures is really where we thrive. We want to create, a regulated, safe offering that is reliable to consumers at the end of the day, and offer an alternative to all the black market products that are being sold to date.
Yeah, you bet. Okay, so what other sort of delivery systems do you produce apart from extract pens?
Yeah, so vaporization technology is obviously going to be the flagship product. So introducing the Made By brand, which focuses on small format, recyclable, disposable pens, and then moving into some smart vaporizers with closed loop systems. In terms of the products that we currently have, it's mainly around combustion accessories, so for actual smoking, as well as all the preparatory accessories, so everything that you see from grinders to rolling trays and everything in between. So kind of covering that spectrum of ancillary products, and then moving into vaporization specifically.
Sure. So my question is, who are all of the other LPs using to package up and to containerize and deliverize their products and extracts if they're not using you? I'm just curious, because that's like, do they do this in-house primarily, or is this the opportunity?
Yeah, for sure. So like I said, we like to own the brand in the space and own the whole creative and marketing and sales component behind it, which is why Valens is a great partner to be able to provide their extract expertise on the back end. A lot of licensed producers do have it in-house. They are ordering off-the-shelf hardware from offshore manufacturing, or working with kind of a third-party entity in the North American market to get their hardware. So you look at your Green Tank Technologies, Jupiter with Tilt, that just announced some financing today, and kind of similar entities like that. But it's all white label hardware. So because we own, hardware all the way to the consumer-facing brand, we really look to just fill the gaps on the back end with the extraction capabilities. So that it offers us, agility to move into new markets like the U.S. and work with the bigger extraction players down there as well, and still maintain everything around the brand.
So as far as the brand is concerned, is this more, for example, Valens Grow powered by Burnt, or is it more like Burnt powered by Valens Grow and the white label relationship?
Yeah, for sure. So it's definitely a lot more like Burnt powered by Valens.
Okay.
And the reason being, they do have to be the licensed producer listed due to it being their specific license that we're using to go to market. But all the marketing communications materials and what a consumer would actually see would be the made by brand. And that's really the core focus that we're driving is, having that focused approach and kind of questioning, I guess, what the cannabis industry has done to date, as opposed to, the need for vertical integration to have a retail entity all the way to extraction processing in-house, be the brand, be everything. We've picked the two pillars that we're best at, which is brand and hardware, and really just driven our focus from, staffing, talent efforts, as well as just timing capabilities around those two pillars.
So does, and you can tell me if I'm stepping into NDA territory
Yeah, for
here.
sure.
So does Valens Grow pay you per unit to fill your product with their product and buy your shelf space, or do you buy wholesale extract from Valens Grow and basically get whatever margin you want?
Yeah, so as far as I can go into the details, it is just a profit sharing relationship. So
Okay.
we both share in the revenues, profits, as well as the costs. So with that fixed structure, we're both seeing the return from whichever party's purchasing the product, if it be a retailer direct in Saskatchewan or the government body at the AGLC and so on.
Very egalitarian of you. Okay, so then finally you are in the process of becoming a publicly traded entity at some point. What's the landscape look like? How much have you raised? Who are the main shareholders?
Yeah, for sure. So we actually just closed up our seed round about a month ago. So we were raising 2.5 million in equity financing, just closed out an oversubscribed round at just under 3 million. We'll be raising our Series A in Q2 of 2020. So with the execution of Made By, being able to raise some capital for additional growth. So the capital that we've already raised to date has got us to an EBITDA positive mark, and we'd be looking at that new capital for additional market entrants and so on. Some of the predominant shareholders are some of the angel groups here locally in the Toronto and GTA area, as well as some of the funds based out of Edmonton and Western Canada specifically. Our main headquarters is out of Edmonton, and we've stayed pretty true to Western Canada, aside from some of the software and marketing teams that we have here in Toronto.
Very cool. Well, congratulations on that. We'll continue to follow your story. It's very interesting, Simon. Thank you very much for joining me today.
Awesome. Thank you very much for your time as well.
Yeah, we're going to have a short show today, but then we changed our minds. We're back. In short.
Okay. Yeah, well, that's like, saying, hey,
That was our end music.
you want to get off at a certain spot and when you're in a cab, and you say at the last minute, you know what, take me somewhere else.
Or you're waiting for a train.
Right.
And everybody's getting on the train and the train leaves and you're like, what the fuck? That was my train.
I've done that. I've done that.
Yeah.
I hate to admit it.
I was looking at the stats on our Twitter feed, and it was quite interesting. Oh boy, the reality is, do you know that the demographic of our audience is now well known by Twitter, and Twitter reports analytics to people. And if our internet wasn't so damn slow, we would actually know what they were. But, oh man. Anyways, so our number one audience, oh, here it is. I'm on the wrong tab.
Okay.
Look at this. So this is our audience breakdown, which we can look at on the NDI. Is so 99% of our audience is interested in dogs. 93% of our audience is interested in comedy. 89% of our audience, now this is why I think we should continue to our search and our attempts to recreate old songs, music festivals and concerts.
Right.
82%.
So Steve must watch. So.
Oh, Steve the Meisner, yes. 82% are interested in sports news.
Yeah.
Science news, 80%.
Right.
Comedy again, movies and television at 79%.
Yeah.
So either...
Well, that's the stuff we talk about. Isn't it a coincidence? We talk about stuff and people are interested in it.
Well, no, but we talk about dogs. No, but we don't talk about dogs a lot. I mean, I talk about my dogs occasionally.
Did you see the movie Alpha?
No. About a dog?
Well, it's about a dramatization of something that happened 20,000 years ago, when our species went hunting for buffalo or bison or whatever that creature was back then, and somehow one of the young new hunters got hurt and stranded, and then he got attacked by a wolf, and he hurt the wolf, and then they became friends, and then he brought him back to the camp a year later, and she gave birth. Well, I guess it wasn't a year later. The cycle isn't that long. But anyway, make a long story short, it's supposed to show how man and wolf bonded and the dog evolved.
This is during, while they were hunting what?
Watch bison.
The predecessor to steak.
Yeah, they were looking for a little, looking at T-bone.
Right.
T-Rex bone.
See the T-bone
There's
on
a
that?
T-Rex
Woo.
bone. So
Look at that porterhouse.
You know, all dogs are descended from the wolf.
So wait a sec. So this wolf and this young girl?
No, young fella. His father was the
wolf impregnated the young fella.
Stop.
Trying to keep this G-rated, Edward.
Look, watch the movie Alpha if you're a dog lover.
It was the other way around. He was fucking the dog. That's where that expression comes from.
He says, "You
Doesn't
lazy
that mean
piece
lazy?
of shit." He says, "Look, Dad, I'm fucking the dog." Son,
Boy, oh boy.
you got a lot to learn, son.
I tell you, it's amazing even 40 people watch us on any given day, isn't it? Yeah, but so, anyways, at 68%, guess what our audience has a deep, deep interest in?
68%?
Yeah,
Dog food.
the weather.
Well, I often talk about the weather.
Do you?
I'm a meteorologist by
You're actually, that's what it is. You're drawing the meteorological interest crowd. Well, I find that fascinating. Do you want to hear what the occupations of our audience are? Because this is fascinating stuff, I'm telling you.
They don't work because they got time to watch the show.
Well, our number one audience is professional/technical. That's 28% of the audience is professional/technical. But number two are homemakers.
Women. Well, no, not necessarily.
Hey, easy there.
Sorry.
Does a homemaker immediately connote woman for you, you sexist bastard? That's what I want to know. Okay.
Does the term alpha mean anything to you?
Yeah, fuck the dog. To be lazy and relaxed.
You know.
So yeah, number two is homemakers. Number three is health services providers. 19%. 19% of the people care about others.
Well,
Caregivers.
Home caregivers.
Prostitutes. Health services workers.
Health services.
Only 19% are self-employed.
Really?
Yeah.
Well, they're too busy. The self-employed people are the ones that are busy.
Aren't they the ones that collect welfare? That's self-employed, isn't it? Or collect cans and bottles. An underrated profession, if you ask me.
Collect cans, cannabis.
And 11% are retired and 5% are students.
Any people homeless?
Well, the self-employed. And the homemakers. Actually, those are the home wreckers. I keep confusing those. The buying habits of our audience was also somewhat interesting.
Body habits?
Buying habits.
Oh.
Buying habits. 75% of our audience are interested in quick and easy purchasing.
Quick and easy. So buying online.
Buying online, quick and easy, cheap and cheerful, value for money. 71% of our audience likes premium brands, like the Midas Letter.
Premium brands. Premium brands?
67% of our audience are fresh and healthy shoppers.
You know, I feel like I should start watching the show. There must be something in there for me.
You've got a good seat. Let's see, vegetarian, natural living, Mexican foods. Do you like Mexican food?
Holistic approach, maybe?
Si, senor.
Bring that category in.
Holistic approach.
Holistic.
Weight conscious. Value conscious, ethnic explorers, home cooking and grilling. This is our audience.
You know, I kind of like, you know, audience.
We should start cooking.
We should start becoming a little more familiar with our audience.
Well, we should. Well, this is the first step, is to see the analytics from Twitter. Now, the education is also interesting to me. 65% completed high school. Only 65% completed high school. What I want to know is what happened to the other 35%. 27% completed college, and 9% completed graduate school.
9%.
9%.
How many completed?
That's a low ratio.
I completed
Post-secondary education?
Yes, and I got a degree in public accounting, which I immediately had to give up because I couldn't afford to pay for my dues. Oh. And then they said, send in your certificate. I said, I can't find it.
Huh. Despite this, 68% of our viewers are homeowners and 34% are home renters. Now that's funny because I'm both. I rent a home and I own a home. Mind you, the home that I own is basically uninhabitable.
Yeah.
Unless you're a bat.
Big news in McDonald's today. Did you see that?
No.
The
What
CEO of McDonald's was pushed out because apparently he had a little
relationship
with an employee.
Now, that doesn't strike me as a firing offense. Having a relationship
We
with an
live in
employee.
2019, and I think that
So you mean
the lines of authority got muddied up. I think makes a lot of people feel uncomfortable. Now, it'd be different if he married the person and...
Well, so wait a sec. So if you have a relationship with somebody who you employ, that's not right. Unless you marry them.
It depends on what your board is.
Unless you really want to screw up their life
They say
and marry
this is
them.
the best CEO in the field of
Hamburgers?
service industry.
Oh,
They say this guy
That's
is...
pretty generous. I've been to McDonald's. I wouldn't
And
call it
McDonald's
that.
stock, by the way, has been on a major tear.
Really?
Like, oh, yeah.
oh, well.
Who does?
Well, actually, that's Donald Trump wants to know what you're up to later on.
Okay. Maybe they're going to... Hey, maybe pick me for CEO of McDonald's.
You want to hear something hilarious? So the number one wireless carrier of our Twitter audience is Verizon, which suggests that our audience is 29% US.
And maybe frugal.
Well, actually, no, wait a sec here. 28% is AT&T, 19% is T-Mobile. Wait a sec, there aren't any Canadian providers in this list. We don't have any Canadian audience watching us mobilely.
Rogers. Well,
Rogers isn't even on the list, which is really weird because I looked at this list yesterday and Rogers was at the top of the list. Oh wait, this is with country United States. Oh.
Maybe you got to put in Canada.
Huh. That's odd. Anyways, the...
I make a point here about the S&P.
Oh, right.
As I'm looking. The RSI is now, about over 70. Over 70. It was close to 80 this week.
Yeah, okay, so overbought.
Yeah, well, yeah. I mean, look. It's moved now from about the 2850 level, 2880 level to 3080. It's up 200 points since middle of October, half a month.
Huh.
So this move here. I mean, look. You say to yourself, how often does it make a move like this without a correction, a meaningful correction? And that Jeffrey Sott guy, who's considered to be a pretty good smart guy, said that there's some signals that have been flashed. He doesn't expect a change in direction, but he expects a meaningful correction to shake the tree.
Well, meaningful correction, that only happens in one direction.
No, well, I know, but a meaningful correction to work off this sort of excess that's
built in.
a bit of an excess here.
Well, but if the S&P is ultimately the measure of all the money printed in the world, the majority of which is going into U.S. capital markets.
500 companies, that's all it is, 500.
Yeah. Well, but we're talking $17 trillion 2.3 trillion euros every month. And, fractionally banked out to a multiple of that. I mean, you're talking trillions of dollars being printed every month.
I know. Well, I bet you it's probably 100 billion.
So here's a thought for you. Is it possible for the S&P to actually reflect corporate health at all in America anymore?
A lot of the money that's going into the S&P is because companies are using their cash to buy their stock.
Right.
That's a double-edged sword, because their balance sheet's becoming worse and worse as they spend their cash at higher and higher stock prices. Now, because rates are so low, a lot of can be forgiven, but there's a number there somewhere, and that's why I'm watching this interest rate thing daily. So it ain't gonna get by me.
Okay, I'm gonna fasten my seatbelt. Sounds like we're in for a wild ride.
You know what? Maybe we should have a seatbelt in here. We should have a little rocket ship that we can jump into and just whoosh.
And a leather swing.
A rocket ship that has a one-way ticket to Mercado.
Ooh, actually, that's where it drops you off, I'll bet. Huh, fascinating. Okay. Looking at the large cap index here, Canopy Growth is the leader, up 3.05% at this hour, up 79 cents to 26.69. Aurora Cannabis is up 6 cents or 1.28%. Kronos Group is flat at 10.82. Cureleaf Holdings up 2.61%, 16 cents to 6.28 per share. And Afria, now correct me if I'm wrong, showing 6.84 a share, up 3 cents.
Flying.
But when I click on the chart, it shows that it opened at 710. So how can it be up 0.15% if it's now at 682 and it opened at 706?
Well, what do you mean? It's up from the previous. It's up from the
open from $7.10.
Right.
That's today.
Yeah. But
current price.
Yeah.
$6.82.
And that's up how much? 1 penny.
0.15%.
Okay, but it's up a penny.
Yeah.
Okay, so 1 penny. So that means it closed on Friday at 6.81. See, it's up a penny on the day. Not a penny.
From Friday.
Yeah, it's always
not relative to this opening price.
No. It's relative to the closing.
No wonder I'm losing so much money.
Hey, you know what? Look at
that makes no sense to me.
Look how fast you're picking up these pearls.
Jeez, where would I be without you?
How would I? Now you know. How'd you learn? On the show.
See, everybody should subscribe.
Okay, that's it. They don't look at it from where it opens. Okay, so the candle would be what color today? Well, I'll tell you what color it'd be. Might still be green, but it's got a long wick.
It's actually red.
Okay, right.
The long wick with a modest
wick.
There it is up there.
There you go.
Look at that.
Is that a daily?
See, this is the thing. If this is the price intraday, let's go to the 1 day. So I don't understand how you can call that an up day. I don't see how that can compute to 0.15%.
Because it's up a penny from where it closed on Friday. It gapped up. It was a gap up. Gap up. Afria?
Anyways.
You're not convinced, are you?
No, strikes me as faulty. But anyway, so the reason that Afria is up is because it announced the doubling of its capacity today. Did you catch that at the beginning of the show?
Afria did?
It doubled its capacity from 130 kilograms to 130,000 kilograms to 255,000 kilograms per year it can now produce. You know we're on track to produce 3 million kilograms of cannabis, and the expected consumption is 1 million kilograms of cannabis in 2020.
How long does this cannabis last before it goes bad?
How long is a piece of string?
Okay. I see your point.
I stumped you there, didn't I?
You certainly did.
How long is a piece of string? Well, that depends how long you cut it.
Yeah. Yeah.
Anyways, so on the CSE index,
Wow.
the action's a little bit different. Global Health Clinics is up 150%. Look at that. It's up 2 cents from 1 cent to 3 cents. How about that, eh? 153% increase in one day. Let's reorder that.
You know, are you sure high was 712? Yeah. Okay. Look at this thing. It's flying now.
Last, let's see.
So James, really,
Yeah.
if we're only going to use so much, produce or consume so much cannabis, and they're producing way more
Yes.
than we're consuming,
Yes.
do they see something out there that we don't see?
Bad crop next year. Stockpiling.
Stockpiling.
The legalization of cannabis in the U.S. and we're going to export all our excess cannabis to the U.S. Oh no, wait. There's literally thousands of tons of stacked hemp in every state where hemp is being produced that cannot be sold at any price because there's such a glut of hemp in the United States right now. So I don't know how prices can possibly stay this high. And when you think about that in the context of the cannabis companies and their current revaluation down anywhere from 50 to 80% since their intra-year highs in April, where do you think this market is heading? Got below!
Yeah, you know what? You know, if you showed me a good marijuana deal right now, I'd seem interested.
Okay, so this is
And they said, well, you want to write a check? I'd say, no thanks.
No, I'll wait and buy it out of the market if I see it going up.
Yeah.
So this is the thing. In this market, you want to find the companies that are demonstrating an uptrend, or which companies are likely to avoid the downdraft that is going to be part two. So which companies are isolated from price competition on the inputs? And arguably, those would be the value add producers, the value add product producers, consumer packaged goods, extractors, etc. The further up the value chain you go from primary production, the better isolated you're going to be from commodity price competition in terms of your own profit relative to those companies that are 100% reliant on price per kilogram for their profit.
Any way you look at it, to me, it looks to me like this is a very competitive industry we're in, and it's going to get difficult to keep raising money.
Well, there are CEOs out there who will tell you that you can't raise a dime in this market right now. Mind you, there are other companies that are raising money. I mean,
Say it again?
there are companies raising money in the cannabis space.
There are?
Oh, yeah. If you Google the term cannabis financing and you click on in news, let's see. Tilt Holdings announces up to $35 million from, whoa, wait a sec, up to $35 million shareholder-backed financing. Okay, so secured notes coming from shareholders. If you go back one, we saw that Hexo announced a $70 million raise last week. Insiders subscribing for 10% of that raise.
Debenture.
Debenture.
You notice there's no more equity. It's all debentures.
Well, so this is the thing. Let's look at, okay, Michigan marijuana firm raises a total of $25 million in the U.S. And this is C3 Industries, a cannabis producer and retailer based in Ann Arbor, Michigan, raised $16.5 million in private financing.
I think we got to go that route.
What? What route?
You know, those deals, internet deals.
Yes, yes, you're quite right. But so there you have it. Companies are raising money, but they're doing it in a very, it's very
Tricky?
few and far between. Yeah, it's tricky. It's tricky. It's tricky. It's getting tough out there. But I think that you're going to start to see the real bifurcation of cannabis companies into those who can and those who cannot raise cash, those who need to raise cash to stay alive, and those who could truck along just fine without it, and that's why people want to put cash in. You notice that how when you really, really, really need cash just to keep alive, that nobody will lend you cash, but if you could take it because you're doing fine, that's when everybody wants to lend you money. What is it with that?
In other words, like the banks will give you an umbrella when it's sunny out.
Right.
And as soon as it starts raining, they want their umbrella back.
Pretty much.
It's such horseshit.
That's what they call a cruel, cruel world. Anyways, what other news do we have?
What's the ticker for the extraction company that rolled back 201 to 1?
Oh, FSD Pharma.
Is it still FSD?
Yeah. Yeah, they just announced the closing of another tranche of their financing at $20 a share.
I wanted to
look at their chart.
Yeah, here we go.
Yeah, pull up a chart of FSD. The symbol's huge.
Okay.
This is intraday?
This is
This is a week.
This is 3 months. Now it's 3 months. 6 months.
No, now it's 6 months.
Yeah, look.
Now focus on like the last. Let's go to one month look, because it's really the 1 month where things are turned around.
Okay.
Okay, so look at that. So it's trading right now. What's the
780?
780.
And that was the big.
And they
move.
just closed another tranche of a $20 financing. So why doesn't the stock bounce to 20?
So people are putting money in at 20.
Yeah.
And they can buy it in the market at 770, 80.
Yeah.
That seems kind of strange.
I don't know. Maybe the guys who are putting money at 20 don't know that it's selling in the market for 770.
Okay, maybe one of the conditions is you have to sign a statement saying you don't follow the stock.
No, maybe the signature went, no matter what the price is in the open market.
It's not real.
No.
This is real.
Maybe they just agreed to sign. Maybe they're trying to send a message to the market directly, saying, "Look, market, you're dumb. We're putting in money at $20, and yet here you are at $7. You are not quite associated with reality here." Let's pull up a chart of FSD intraday again. I want to take a look at this. So this is the thing. Somebody is not receiving here.
This is a couple month chart, or no, 1 month. 1 month.
Now, if you don't back out of a financing when the stock's trading at 770, when you committed to put in money at 20, what does that mean?
It means you probably have a screw loose.
Well, or you know something about the company that makes you comfortable to buy it at $20 a share.
In the early days, or a year and a half ago, when we saw there was times when you wake up in the morning and 80% of all cannabis stocks are up 10, 20%. Mm-hmm. Those days don't seem to be coming back anytime soon.
Well, they won't until they will. And you know what? It's going to still, despite the condition of the market, it is still a possibility that a single event catalyzes a reversal in the whole sector. Much like Constellation Brands stepped in and bought Canopy, put up $5 billion. That changed everything. This market was in the same place at the end of the year last year. It was down 50% from its all-time highs, or rather 2017. This is the interesting thing. We've been here before. In fact, this is the third time we've been here in the cannabis space. So the night is darkest before the dawn in the market, more so than ever. Yes, there's a lot of free paper still coming into this marketplace, but imagine if Pfizer says, you know what, we're going to buy Canopy Growth, Aurora, and Kronos, and we're going to pay $5 billion for each one. Do you think that could actually make everybody say, wait a second here, maybe we've got the math wrong? Maybe you need to have a bit of a longer term perspective on what this market actually is than 1 quarter or 3 months or even 1 year.
Yeah.
And maybe that's what's happening. Maybe that's what's going to happen. That could be the catalyst.
We're talking about weed, right? We got a...
Yeah, we're talking about weed.
And WEED specifically...
You're talking about the stock, not the substance.
I got a 6 month chart up here, and I'm going to click on it. I just want to point out a couple things. It looks to me, if you just took a general look here, you see there's a trend line there, like I kind of kept it going straight because it looks like things are now starting to flatten out. In other words, like the action today would suggest, we're not declining as much. We may be eroding a bit, but we're now going to the side, right? So the trend to me now is, but I don't see any evidence of a shot up yet.
No, well,
we get over $30, and I think that's...
Well, as Shane from Hedgeye said earlier, he says, I can tell you which stocks are going to do well, which stocks to go long on. He says, but we're not thinking of going long on anything. I can tell you which stocks to short. We're going short all the Canadian stocks because they think that the Canadian stocks are already under super price pressure and are, poised to go a lot lower.
And what was the name of this company again? Something Hedgeye.
Hedgeye.
E-Y-E.
Hedgeye. How do you spell, what is E-Y-E spell?
E-Y-E?
No, I can't remember. I screwed up the joke. Never mind. We'll have to try it another day.
You've only asked me 3 times.
I know.
And I got it right every time.
I know. I'm hoping to catch you one time.
You're not going to catch me now.
Not in this lifetime?
No, unless I get Alzheimer's.
Well, that's what I'm waiting for, basically.
Well, feed me some red meat.
Feed you some
some
red.
people...
How about some... I've got better edibles than red meat.
But it's not about red meat. It's about red meat that's inside our industry. I hope I don't offend anybody here, but
the cows are
a
already
lot
offended.
of people feel it's what they feed the cattle that's causing the problem. Like a cattle in the wild gets to eat real food,
right?
And that's what we should aspire to: real food.
Well, cows are real food.
And the cheapest food's always in the produce section.
Steak
and it's the
is real
best
food.
Steak and eggs. I want to
Pure protein diet.
Is it 4 p.m. already?
4:02.
I haven't quit talking yet.
We're running into overtime, Ed. Do you know what that means?
He shoots, he scores.
Anyways, that's it for today, everybody. I hope to see you tomorrow. Don't forget to subscribe if you'd like to.